think that the institutional push into Bitcoin will be quite significant to the price.
I think what Bitcoin's really doing is it's showing there's this new view of the world. So far, it's been right. And if it continues to be right, there will be trillions of dollars that flow into the asset.
So the scarcity value as institutions move in will begin to move the price.
Well, we control the global reserve currency, so that's a huge benefit and kind of tailwind for us. Right. But I don't see us balancing a budget anytime soon. I don't see us paying back the debt anytime soon. And so definitely it looks like America's future is going to be based on taking on more and more debt. Now, what that means is, as an individual, whether you like it or not, you can't change that, right? There's no one individual who's going to be able to change politics or Congress or any of that stuff. So what you have to start thinking about is, with your portfolio, what are you going to do? Right. And what we've seen is that, again, inflation and debt equals returns in stocks, bonds, commodities, Bitcoin, cryptocurrencies, et cetera. And so I think you're going to have an entire generation of people who are growing up in a more financialized world, and they're going to plow all of this capital into financial markets. $50 billion or so coming into these ETFs that are going to get approved at some point here in the future. If you look at the fee schedule, that's somewhere between $500 million and $1 billion of annual revenue that's up for grabs. And it's not just for 1 year. That's every single year for perpetuity. Right. How much would you spend if I said that there was $500 million that was up for grabs? 100 million, 200 million, 300 million? I don't know what the answer is, but we're about to find out what these firms are going to do. Listen, when you put BlackRock, Fidelity, Bitwise, and many other of these issuers together, not only are you going to have a lot of money spent, you're going to have a lot of creativity come into the market. And so what we're really going to watch here is, in some way, Wall Street is about to go and market Bitcoin and cryptocurrencies to the nation. And that's only going to lead to more capital.
I got less than a minute to go. Maybe. Are you comfortable now with these big names coming into this space?
I think it's just inevitable. If you want mass adoption, you're going to have to get these large organizations to go ahead and adopt it. And as that occurs, you just have to remember there's a trade-off. And so, yes, there will be some blunting of some of the other aspects of Bitcoin or cryptocurrencies. And we can't change it. So just be prepared, get educated, make sure that you understand what the market structure is going to be over the next coming years.
I love your attitude. Listen, you can't change it, so make the most of it. In this case, make some money.
What does it say to you about the stance of the SEC, which, as we all know, historically has been not as engaging and, shall we say, collaborative on Bitcoin ETF efforts?
Yeah, I guess the biggest controversy, and this is in the press, but I'll highlight it because I think for most of us, it has been, wow, are they going to allow in-kind transactions, so limiting the tax impact of transactions, or is it going to be primarily in cash? And I think, as has been reported widely, I think it's cash, not in kind, at least at the outset here. And I think there are just a few people within the SEC who are just somewhat concerned that banks will be forced to touch crypto. We're not sure they will be, but we're talking about something very technical. So to answer your question, yes, very technical. But that has been, I think, the big issue as we head, hopefully, towards a resolution.
We're are skeptical that the market reaction aren't going to match the current buildup that we've been watching, like we talked about, with the engagement and the feedback, especially as of late, as firms like yours continue to be in conversation with the SEC, and that what could happen instead is more of a relative value trade out of existing products like GBTC, which you're an investor in, and crypto futures ETFs into the spot ETFs. What do you think?
Well, I do think there will be repositioning for all kinds of reasons, but I do also believe that the SEC approval will be a green light for institutions who have been holding back. Now, we've had a big anticipatory move here. It wouldn't be surprising if we saw a sell on the news. That's an expression in the market. Sell it. You have a lot of anticipation. A price moves up. The event happens, and then especially fast trading organizations sell on the news. But beyond that I think will be just maybe a very short-term phenomenon. I think that the institutional push into Bitcoin will be quite significant to the price. Is institutions, as they move they don't have to move very much in. They can move, there are trillions of dollars in assets to be allocated. If they just move in 0.1%, forget about 1%, but even 0.1 or 0.2%, that will move the needle, especially as we know, the number of Bitcoin outstanding right now is about 19.5 million, and the further that number, the furthest that number is going to go is 21 million. So the scarcity value as institutions move in will begin to move the price, we believe. New ETF, it takes a while to educate investors, asset allocators, advisors about these new offerings. So slow as it goes, but the most important thing that's happening right now is, we're watching the plumbing, and the plumbing works. That's extremely important. 21 Shares is the largest pure play ETP crypto provider in the world with roughly $2 billion in assets. So that has been mostly in Europe. This is in the US now. And so we wanted to make sure the plumbing works, and it's working beautifully. And I do think that a spot Bitcoin ETF will stimulate, once institutions and other investors have a toehold into the space, they will want ways to diversify. And so we wanted to be ready with those 5 strategies to help with actively managed diversification strategies. Some are lower volatility, some are more diversified with digital asset equities. So again, we're trying to be, shall I say, a go-to for anyone thinking about investing in digital assets.
Bitcoin is a free market asset. And I think one of the things people forget in finance is that markets are forward looking. And so what we're seeing here is people are allocating to an asset that they believe is going to go up in the future, obviously. Things that will drive that are the Bitcoin ETF. But as people are allocating to this, 70% of the circulating supply of Bitcoin has not moved in a year. The reason why that's important is this is an $800 billion asset that has gone up 150% over the last 12 months. So when an asset goes up 150%, you would expect people to sell into the strength, kind of take profits. That's not happening. And so Bitcoiners are not selling that Bitcoin. They're not going to sell it to Wall Street. And so Wall Street's going to have to continue to bid up the price.
In order to that share issue. So the 70%, that has not changed, not just this past year, but by the way, that has not changed, I don't think, for many, many years.
It's always been very high. 70% is the all-time high, so it's been creeping up, which has this reflexive kind of feedback loop, right? So if more people won't sell and price goes up, then price continues to go up even more rapidly.
Okay.
It's interesting when you look at the data, it's a little bit of everything, right? There's definitely more accumulation happening. So people who already had Bitcoin are continuing to buy more Bitcoin. An interesting statistic is if you dollar cost average every single day with $10 from January 1st until now, you're up 100%. So with all the boom, the bust, everything in between, a Bitcoin analyst, Dylan LeClaire, pointed out, you're up 100%. So just dollar cost averaging alone gave you a great return. Now, there's also this net new wave of capital coming in. So you have the institutions, but also you have a bunch of people sitting on the sidelines saying, well, if BlackRock wants Bitcoin, maybe I should buy some as well. And so that net new capital is definitely starting to come in, but I don't think we're actually going to see it until the gun goes off. Markets are forward looking. And if you go back to 2021, Bitcoin started to fall as soon as the Fed started talking about we are going to cut rates. And so people were like, oh, wait a second, inflation is high in the summer of 2022. Why is Bitcoin falling? It's supposed to be this inflation hedge asset. But it was because Bitcoin and the holders saw what was going to happen. Same thing's happening right now. Bill Ackman's betting that interest rates are going to get cut in Q1. The market's pricing at 100% likelihood of an interest rate cut in Q2. Bitcoiners right now and people who want Bitcoin say it's going to happen even earlier. If you have $1 today and you want to store wealth, you historically could have bought gold, you could have bought fine art, you could have bought all kinds of real estate, whatever. Hard asset. Young people are saying to themselves, I want to buy the hardest asset I can find, which tends to be Bitcoin. And it's liquid. And it is the best performing asset over the last 10 years. But it's not. I think what Bitcoin's really doing is it's showing there's this new view of the world. So far, it's been right. And if it continues to be right, there will be trillions of dollars that flow into the asset.